Hi, I've got Douglas Isles, one of the investment specialists from Platinum with me, and I really wanted to get Platinum's views on what's going on with currencies. So obviously we've been very sensitive in Australia to the fact that the Australian dollar's fallen enormously against the US dollar.
Yeah.
But you were telling me earlier about the ski holiday test is maybe a better measure of what's going on, and maybe give us also a bit of an insight to what Platinum's view of the currency outlook is.
Yeah, so if we take it to the ski holiday test, Catherine, my wife and I were talking about going skiing next year. For some reason she wants to go to America, and I've been trying to explain that's the only currency that the Australian dollar has actually fallen against. So American ski holidays have become more expensive. Europeans and Japanese ones have actually become cheaper. I think Canada were probably doing about the same. So it's been interesting the last couple of years. Australians know that going on holiday overseas has been cheaper, therefore they actually intrinsically know that the currency is overvalued. All that's happened so far is the US dollar has gone up. We don't think the Aussie dollar has really fallen. So currency markets, again, like equity markets, the media is very US-centric when it comes to overseas affairs. And with the currency, we know that the Aussie's 70 whatever cents it is today, but people don't talk about how many euros or yen or yuan or won or whatever. And our trading partners, America, makes up less than 10% of our trade. So it's not necessarily the right currency for us to be focusing on. The way we look at it, Platinum, we manage our currency exposure. So when we buy a stock, we can decide, do we want to own that, the currency of that stock. So take a Toyota, we would be exposed to the yen. If we own Samsung, we're exposed to the won. So we decide, can we strengthen the exposure? And we bear in mind that our clients are predominantly Australian. So if the Aussie was to be undervalued, which we don't think it is, we would hedge back some of the portfolio into the Australian dollar. But interestingly, the Reserve Bank talk about the currency being 75 cents. It's not in the Reserve Bank's interest to talk the currency below the value they think it's worth, and they will be more than aware that currencies overshoot. So by saying 75, I think they know that it's worth a lot less than that, and that's the important thing.
And so does Platinum have in its mind a sort of level at which you'd be starting to hedge the risk that the Australian dollar strengthens again?
Yeah, it's sort of a bit more multi-dimensional than that. So again, we talk about the level against the US dollar, but it's the US dollar that's gone up. There will be a point where we no longer want to own the US dollar. We have 60+% of our portfolio in the US dollar. We don't see any reason to own the yen or the Aussie. We're less inclined towards the euro, but it's okay. So at some point, the US dollar will become less attractive, and then we'll have to see at that point where do we want to, place our currency exposure. My guess would be at that point it may be the euro, but we don't know what the dynamics will be because that's somewhere down the track.
Yeah, okay. Well, I think currencies are enormously difficult to predict, so I'm sure Platinum has a team working on it on a day-by-day basis, but it's really interesting to get your view. Thanks, Douglas.
That's great, thank you.